XRP ETFs just hit a 2026 weekly record. During the week ending May 16, these funds pulled in $60.5 million in net inflows, marking the largest single-week total since their U.S. launch in late 2025. This is a significant shift in capital movement, especially when Bitcoin and Ethereum ETFs are experiencing outflows. The data suggests that investors are rotating into XRP-linked products amid broader market weakness. This isn't just a minor trend. The inflow figure alone exceeded the monthly totals seen earlier in 2026, pointing to a sharp increase. In institutional interest, the 5 U.S.-listed XRP ETFs, XRPC, XRP, XRPZ, GXRP, and TOXR, all saw positive flows, which is notable because it shows broad-based demand across multiple platforms. This isn't a one-fund anomaly. The record inflow pushed cumulative XRP ETF net inflows since launch to $1.39 billion, with over 886.8 million XRP now held across these funds. The timing of the inflow is also important. It coincided with a strong spot price movement. On May 14, XRP surged over 11% in a single session, breaking through the $1.50. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Resistance level and reaching a high of $1.54. This price action appears to have triggered further ETF buying as momentum built through the rest of the week. The surge in ETF flows suggests that institutional investors are responding to on-chain strength and market sentiment. XRP's recent performance could be signaling a broader shift in institutional appetite for altcoins, especially those with clear regulatory clarity and market traction. The fact that all 5 XRP ETFs saw positive flows is a strong indicator that this isn't just retail-driven buying. It's institutional capital, moving in a coordinated way. That's unusual in the crypto market, where most ETF activity is often concentrated in 1 or 2 funds. The broader market weakness that's driving this rotation is also worth noting. Bitcoin and Ethereum ETFs are hemorrhaging capital, which means that investors are actively pulling money out of the largest crypto assets and into XRP-linked products. This is a rare and telling signal in the ETF space, where Bitcoin and Ethereum typically dominate the inflow charts. The XRP ETF surge is not just about volume. It's about timing and momentum. The price breakout on May 14 acted as a catalyst, and the ETFs responded with strong buying. This suggests that institutional investors are reacting to on-chain strength and market sentiment, which is a key driver in ETF flows. The fact that the $60.5 million inflow figure alone surpassed the monthly totals from earlier in 2026 is a strong indicator of the accelerating demand. It's not just a one-week event, it's a shift in capital allocation that's gaining speed. The next signal to watch is weather. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. This momentum can be sustained. The XRP ETFs have now hit a key threshold, and if institutional buying continues, we may see further price action and ETF inflows. However, if the broader market weakness persists or if Bitcoin and Ethereum ETFs stabilize, the flow of capital into XRP could slow. The current trend is clear. XRP ETFs are gaining traction, while Bitcoin and Ethereum ETFs are losing it. The question now is whether this is a short-term rotation or the start of a longer-term shift in institutional capital toward XRP-linked products.